Hello everyone, welcome to another video. So right now I'm doing the recap of today on the stock market. So we are going to see Nvidia, Apple, Amazon and AMD. But first I want to explore the setups. I want to remind you what is really important to take. So as I told you in the other live stream, it's really important to look at those levels, which are, in this case, the previous day high and the previous day low. This means that the price hit a certain level, a certain price, and then it went down. And from that range, it never broke higher or lower than that range. So that's your previous day high and your previous day low. And you have indicators to help you, so you don't need to do it manually. It's easier. I use one indicator as well. So imagine that you have a market that from the last day it did this. Okay, and it closed like this. So this area, when the market started, it never got broken again, and this level never got broken too. So this is the range and this is the max price and this is the lower price that it took from the day before. So our session starts, okay, in here. So for in my case, but let's do like in the United States. Okay, this is like 9:30 USA time. In this case, not USA, but more specifically New York time. So this is New York time. What do I expect? I expect that the market does something, does a pattern that is a rejection pattern on those levels or a continuation pattern. And what are those patterns? I do consider valid patterns like double tops, and we enter on the neckline, on the break of the neckline. If a candle closes, I just need a candle with a nice volume to close right there. I would take a trade. I would set my stop loss there and my take profit wherever I want, but actually it's usually it's 1-to-1. Another setup, it could be, for example, a continuation one. So it breaks the level, it shows bullish pressure, it shows bullish pressure, it comes to the level again, and it goes with nice volume and really aggressive, so it means that it's really rejecting that level, and we enter on the break of that structure. So I need to see a candle closing above that structure and I do my entry. Stop loss always on the last structure, which is this one, and I target 1-to-1. Another valid pattern is the market is creating structures, another structure, it hits the key zone, our previous day high for example, and it reacts really aggressively, direct, like it just goes and breaks really aggressively the last structure, like a fast reaction, a fast, in this case, bearish reaction, okay? So in here it's like our previous day high, okay? It's just an example. And we can have our previous day low here. and I'm looking for a fast reaction that it takes this structure here. So I just need the candle to close, and then I took the trade like this. Stop loss above the last structure, which is this one, and I take 1 to 1. So sometimes the setups are not so clean. Most of the times they actually are, but for example, this setup in here, the continuation one, we could watch something like this. It breaks, it comes down a little bit lower, okay, it just doesn't reacts from the key zone, it goes just a little bit lower, and then really strongly it goes up and it breaks. This is also valid. I'm still testing if the win rate it's worth it, because I don't have like too much data, but for me it's still valid because it shows really bullish pressure, and we wait for the candle to close. So this is the difference. It goes, it tests the key zone, and in here it goes, it breaks the key zone, but it just went up and it breaks really aggressively the last structure. We can consider this like a fake out. Okay, so it was like, okay, it braked, but then there is no enough bearish pressure to keep going down, and just the bullish pressure is up, and bulls are like winning, and we have like a massive impulse and we break. So we can consider this a fake out on that area. So let's now see what the market had for us today. So this is our previous day high. I'm just extending the line so it's easier to see. This is our previous day low. So this is when the market started, okay, in this line. This is today, 4th of November. So it goes down, it goes up, it breaks, it goes there on the key zone, and really aggressively it takes the last structure. So stop loss there, and we can, like in this case for me this trade, even it didn't reach 0.5, it was really close, it didn't hit that, but we had up, down, up, down, up. At this level, in this candle, I would put my stop loss like here, or really in my entry zone, because it's really consolidating. So for me this would be a break even, or just a minimum loss, like a really small loss. Okay, so this was AMD. Let's check Nvidia. So Nvidia, this is our previous day low, this is our previous day high, and as you can see, we started here, we never touch any key zone, so there was no entry, nothing happening here on Nvidia. Let's check Apple, our previous day high, previous day low. So market started like in here, so we were consolidating first hour of the market, then rally up, and just check this, it goes up, we are on the key level, it goes down and it breaks. Is this a valid setup? I'm asking you. Just think a bit, is this a valid setup? Is this anything that I showed you? It's really close to what I show you, but it's not the same thing. because I told you, like, we wait for a break, a retest, and a break of structure. In here we have, yeah, we have an impulse, we have a structure, but our structure is below the key zone. It's not retesting the key zone, and it's really important to retest the key zone and showing that the market doesn't want to go down. It wants to keep up and has the force enough to break the structure. This is powerful. This is not so powerful. Why? Because if we enter here on the break, we can like having a double top on the key zone. So this is really tricky. Don't take those setups, wait for this setup. And let's see what the market does next. So, it goes up, it goes down, it goes up again. And look how aggressively it goes down. The perfect example for what I told you, that sometimes it's not perfect. The market actually did this. It did a structure, it goes down, it goes up, and it does this. And it breaks the last structure. So we didn't have a double bottom, we have actually a break of structure. I told you that it could happen like this. It touches and it breaks, but sometimes the market it's just not has like clean setup. So what happened was it went there, it broke, but there was no bearish pressure, so no bullish pressure in this example, and it completely rallied down, breaks the last structure, and look what it does. So the setup here was break of this structure. Let me just check something. Yeah, it broke the structure here. Entry there, stop loss there, and we would target like 1-to-1, and this is a take profit. Let's check Amazon. So Amazon, previous day high there, previous day low here. The market opened like here, and we have the same thing as the other one. We go down, we go up, we go down, we go up. There is nothing here, right? Nothing here, no setup. Our last structure is in here. And then it does this. It goes down. Okay, it breaks actually like down of the key zone. It retests really fast and strong, and then it completely crashed the last structure. And at the same time, it breaks the last structure before. So we took the trade there, stop loss there, and we target 1-to-1. There was no break even, yeah, 0.5 is there, so it was a take profit as well. So those were the setups, we are done. AMD we saw already, so it was no setup, 1, 2 take profits, and 1 break even. This was for today. I hope you guys enjoy it, and subscribe and share if you want with your friends. Have a nice day, guys, and good trades for tomorrow and for the rest of the week. See you soon.